A grand jury on Wednesday decided not to bring homicide charges against police officers involved in the fatal shooting of Breonna Taylor. Now, the latest round of demonstrations erupted after an announcement made on Wednesday that no police officers had been directly charged in the fatal shooting of the black woman. Now, Taylor was struck with 6 bullets during a police raid which went wrong out in March. Several other demonstrations have been carried out across the country across racial violence. We head off to golfing news now, and the South African Dean Bormister, who was the early clubhouse leader, was joined at the top of the leaderboard by Englishman Jordan Smith and Aaron Rai in the Irish Open at Ballymena. The three finished on 5 under, while Irish amateur James Sergey is leading home hopes at 3 under. Now, the 24-year-old amateur there did produce a fine 3 under 67 in his first round. Although Sergey played down expectations, it was a brilliant start for the Irishman. There are already talks of him replicating Shane Lowry's famous win at Baltray in 2009 as an amateur. Smith and Rai were the only players to card flawless rounds in this golf tournament in the first round at Galgorm Spa and Resort. They joined Bormister at the top of the leaderboard at the testing Northern Irish course, should I say. The leading trio are one ahead of another Englishman, Toby Tree, while European Ryder Cup captain Petrai Harrington is thankful that the COVID-19 lockdown helped him as he worked off his game.
Up and down, something that he's always been
Now let's take a look at how this market performance has certainly looked at present to close out this week then as well. We perhaps get a little bit higher up here, and the Asian markets have had a mixed day to close out the week. In fact, it's mostly red across the Hang Seng and the Shanghai Composite. Even if it is only marginal by close of trade, the Nikkei did go up around 0.5% as well then today. Going down though is the European market picture. More than 1% lost across the DAX and the CAC 40 in Germany and France respectively, while the FTSE 100 out in London is 0.25% weaker as well, still down 45 points weaker on that front. It's also filtered through to the local index, so down we go, more than 2% lost. In fact, it seems that the hurt just keeps on coming. 2.4% down then for the financials, with more than 2% loss for the industrials. In fact, that figure looks to be headed towards 3% at this point in time. South Africa's listed properties also struggling across the board, with platinum miners and gold shares also dipping into the red. To help the financials go down, banks went down nearly 2% as well. In terms of companies that have gone up though today, any sign of positivity? Well, the property group that is Liberty 2 Degrees has gone up 4 4/10%. RMB Holdings goes up 3.5% with DRD Gold also enjoying some shine there. 19.72 for a share there, 2.3% higher. But down goes Hammerson, Attack, Montauk as well, all going down today. Massive falls, double-digit falls, should I say, as well on those counters. Onto the commodities board then, down goes the Brent crude price, nearly 1% weaker in fact at present, with platinum also more than 1.4% down today. Gold also unfortunately taking a battering today, 0.7% in the red. And in the local currency, we're back above 17 Rand, and major weakness, of course, following the public holiday from yesterday. Weakness for the local currency by more than 1% against that greenback. Heavy hangover on that front. And we look to be headed towards 20 Rand against the euro. Then it's down 0.8% as the local currency, with weakness as well for the local currency against the British pound, which is still strong at this time, 21 Rand 73 cents. Let's chat to Warwick Lucas now from Galileo Capital as we unpack today's market picture a little bit more. Warwick, great weakness for South Africa's currency. We had hoped to stay below 17 Rand. We're back above that mark, and we can't really say it's not partially to our own doing, but a lot of dollar strength too coming to the fore.
Yeah, absolutely, Rabili. You know, the election in the US is certainly heating up. We're now sort of going into the final stretch, as it were, the last couple of months. We've got presidential debates coming up shortly. In fact, the first one is next week. And it certainly looks like it's going to be an extremely bad-tempered election. There will certainly be a lot of cheap shots, such as particularly at China, which is in the US everyone's favorite whipping target. And that is the kind of environment that will tend to strengthen the dollar. Now, the result of that is whether we're talking about the rand or, in fact, the Brazilian real or any other emerging market currency, we actually, in terms of the last couple of weeks, we're looking at the same kind of picture. So a bit of weakness, whether we're talking the euro, whether we're talking rand, Brazilian real, etc., all weaker in the last few weeks. After, particularly in the case of the rand, I mean, ever since downgrade, I mean, the rand, courtesy of our high real rates, has actually been fairly strong currency, but in this environment, we're going to drop back, and we've also seen it in the likes of the precious metals and so on. You can see the likes of gold, particularly silver and platinum, sharply back in the last few weeks, all indicative of an environment that's got somewhat more cynical of the near-term growth outlook.
Yeah, it becomes difficult then with this rand also, as it continues to just weaken on the fact that we also haven't done anything ourselves to kind of change the picture along. Do we get the kind of sense that we need the reforms to get things going? I mean, the US is perhaps trying to put together some sort of stimulus mechanism, realizing that things are slowing down there quite considerably. Should we perhaps be looking at another round of economic stimulus to perhaps help, even if the first one hasn't necessarily even gotten off the ground in some respects?
I think in terms of local interventions, I think we need some quite definitive action to start taking place. I do believe that Minister Mboweni does actually have a sound and comprehensive plan, and I think that he now needs to enjoy the political support necessary to push that through, and that really needs to come from the broader ruling party. So I think it's not as if we're short of ideas, we're really short of action, focused, comprehensive, and economically correct action that will actually start getting us out of our own rather difficult economic mire.
Yeah, it becomes so difficult there. All right, let's get into some equity news though. Standard Bank now getting embroiled in this entire bank scandal that kicked off, of course, out in Far East Asia. 173 odd transactions are said to have gone through South African banks, which are in some way either unscrupulous and involve money laundering or other criminal activity. This is absolutely bad then for a local bank, especially as big as Standard Bank.
Well, it's always troubling. I think the question for the bank, of course, is was there a systematic failure, or do they have a bad egg that was able to circumvent protections, or was it a case that there was simply a post-event reporting? I think the devil obviously lies in the details quite a lot, and when it comes to this kind of event, I think there's a lot of reporting that happens all at the same time. So I think we actually need to get further color on that, and as to whether there really is anything systematically that's a problem at Standard Bank. But I'm not so sure. I think if anything, Standard Bank is well known as one of those banks that's actually really strong on systems. So I think I'm going to reserve judgment for now.
Yeah, it becomes very difficult, though, because people will sell the rumor and then buy the fact, right? So how far down is this going to hurt Standard Bank's share price?
I think structurally they're going to remain locked into the localized fundamentals, which continue to remain, I think the biggest concern being some very big write-offs at all of the local banks. I mean, we've seen in the last 6 months in relation to COVID, we're probably looking at around about 50 billion rands worth of write-offs. And I think that's the overwhelming environment that has affected our banks. So I think that's the primary stressor. It's sectoral rather than individual issues.
Yeah. All right. Well, Warwick, appreciate the time. Thank you so much on this Friday afternoon for joining us as we unpack this market picture. Warwick Lucas is from Galileo Capital, who joins us, of course, on Fridays as we get to grips with the markets. So we take a short ad break, then we close things over here, then at the Johannesburg Stock Exchange. We head back to Auckland Park. My colleague Diabo Seto standing by then, of course, with SME on point as we get into the